You are listening to ChartingWealth.com for Tuesday, the 28th of March, 2017. Let's jump right into these charts. We see our stocks are mixed. The S&P 500 is down. The Qs, that is the NASDAQ 100, is up just a little bit each way. We see that gold is up for the day and bonds continue to move up. Let's jump right into what's going on with SPY, the Standard & Poor's 500. We continue to see red down candles on our two-day chart. We're still in a confirmed up move all the way back to Thanksgiving of last year. We haven't yet had a rollover on the weekly chart, getting very close. In fact, it may be confirmed at the end of this week. It looks like it right now. It looked like this last week, and then it popped back up again. I don't think that's going to be the case. Think we'll probably have a confirmed crossover by the end of the week. But remember, that weekly candle does not end until Friday. And all things being equal, the market always tends to move in the direction of the largest chart. But we have to have a confirmed crossover going down, and the candle has to end for that to occur. Did have a down day of 0.10%, so 0.1%. Derivative oscillators continuing to heat up, and the price percent oscillators continuing to move down. If we, of course, look intraday on our 2-hour chart, we can see the market opened way down and then recovered a little bit during the day. We don't have a trade yet. We'll continue to keep an eye on SPY. How do you like that little rhyme? Let's go on to the Qs. QQQ. That, of course, is the NASDAQ 100. Still in a confirmed up move on the two-day chart. On the weekly chart. Want to take a glance at the weekly, getting closer to crossing over. Not nearly as close as the S&P 500 is. However, on the two-day chart, of course, it crossed over all the way back on the 14th of March, went up a little bit and then rolled over. We have 3 down candles. Of course, this latest candle is just the first day of the two-day candle. If we look intraday, we see on the 2-hour chart, again, market started going down Friday afternoon, big down in the morning, but then recovered in the afternoon and actually was up 0.16%. So we shall continue to watch still confirmed down move. So even though we had a retracement and a pop-up on the 2-hour chart, doesn't mean that we would trade that because we have a confirmed down move on the 2-day, up move on the weekly. So we want both our weekly vertical crossover and our 2-day vertical crossover to be going in the same direction. Now, we do see some possible trades, however, when we get to the next chart, TLT, which is the 20-year Treasury Bond Fund. We had a crossover going up on the week ending around the 3rd of February. And, of course, we had a 2-day vertical crossover back on the 22nd, Wednesday, the 22nd of March. We have actually 5, or really 4.5 up 2-day candles. We had that crossover and we saw the derivative oscillator switch on the next 2-day candle going up after the PPO, the price percent oscillator, crossed. Now remember what we talked about, and this is something I want to delve into and have us explore because remember, every chart is subtly different. They're not all the same, and when I say every chart, every ETF. The TLT is different than the SPY, than gold, than the NASDAQ 100. But let's take a look at the 2-hour chart. We've seen the pullback that occurred. That started occurring the afternoon, right at the close of the market on Thursday the 23rd, and then it popped up in the morning. Of course, your entry point would have been after that candle closed, sometime around noon. Opening was around 121.28. By the end of the day, you were somewhere at 121.64. But let's explore what's interesting. We saw the crossover occur on Wednesday the 22nd on the 2-day chart. And we talk about getting in after idiot hour, okay? So we had the crossover. We saw the chart on the 22nd begin that crossover period. In fact, let's track that accurately. So that crossover occurred on the candle ending the 22nd of March. That's on the 2-day chart. If we go to the 30-minute chart, what do we see happening? Well, we saw on the 23rd, the market was continuing to trundle down, could have jumped in there at 10:30 at $20.70. We then saw the market on that 30-minute chart rotate back over sometime on noon, again around $20, and this time 64 cents. And again, we don't trade on this 30-minute chart except to explore what's going on that 30-minute chart when it comes to after idiot hour, following a vertical crossover. The easiest is always the weekly vertical crossover. This was a 2-day vertical crossover, but again, going in the same direction as the big chart. If you would have jumped in on Thursday morning at 10:30, you would have jumped in somewhere again around 120.70. It did bottom out later that day, popped back up, and continued to go up pretty substantially. Now again, it's now crossed back over, and again, that was late in the day, and this is just the 30-minute chart. But it is fascinating to watch. We're trying to locate times that are best to jump in when these vertical crossovers occur, and it seems over and over again. The following day, around 10:30, whether it's the weekly or the 2-day chart, seems to be a decent jumping in point. Now, our traditional way of jumping in is what we see on our chart on the 27th at the close of idiot hour, sometime around about 10:30, or actually 10:30 to 12, jumping in sometime around 121 to 121.50, something like that price-wise. So again, we'll continue to track this, see how well that works, but I want you to experiment and try different jumping in points. When we have the charts moving up, it's critical to find points of entry and also points of exit. But points of entry is your first key to jumping into an up move and trying to make money as things recover. And of course, our weekly vertical entry point was all the way back on, what was that? Again, sometime around, Friday the 3rd, that was when we had the weekly vertical crossover actually occur, and then our jumping in point would have been around 10:30 on that Monday, which is around 119 to 119.79. So we're up about $2 from there. But again, we want to make sure that we get the maximum profit with the minimum risk. And that's what we're always trying to look for. So let's keep sorting through these charts. Enough said there. We've only got 10 minutes. That's all we ask from you. For the day, gold was up 0.56%. Now, of course, gold crossed over going up also on our 2-day chart. That was on the 2-day chart actually ending on Friday the 24th. And do we have a buy-in point for gold? If we go to our 2-hour chart, we do not. The rollback is underway. We're still waiting for a crossover. Derivative oscillators in the positive on that 2-hour chart, but we haven't seen the PPO crossover. So keep an eye out for that on Tuesday. That might occur and give you a buying in point for gold on a practice trade. Folks, that's where we are at the end of the day. On Monday, as we go into Tuesday, the 28th, we so appreciate you being with us. We are all about you. We're all about providing you with information to help you figure out what these charts are doing, how to read them, how to invest in them, actually practice investing in them until you develop your skill set well enough that you can make decisions with your own money. We are not a stock calling service. We're an education firm, and we want to educate you into what we can teach about reading these stock charts. Whether you consider yourself a value investor, whether you want to be a trader, whether you want to be someone who invests in the long term, whatever it might be, the key to making sure that you buy low and sell higher is being able to read these stock charts, because buying wrong is stupid when you don't have to do it. And when you look at how well our charts work for telling you when vertical crossovers occur, whether the market's going up, whether the market's going down, whether the market is going sideways, so you can see that. But these weekly vertical crossovers, time and again, work so well. And if you use the rules that we set up and establish, even when they fail, that is, they don't last very long, as happened with gold back in late May of 2016. Had a crossover going down. It didn't hold on that long, and then gold shot up again. But we have opportunities to get in, get out, and make money. And that's what we want to do. You want to know more about what we do? You need to go to our website, chartingwealth.com, sign up for our daily podcast. We will send it to you along with great information, our daily market worksheets that you need to fill out every day to track your progress. You fill it out as you listen. That same 10 minutes you're listening, you're working and filling this market worksheet out, and it gives you a great trader journal, which will supercharge your training. You'll also get our weekly market worksheet. You fill that out once a week instead of a daily. You do that over the weekend after we do our report for Monday, our comprehensive review and forecast. So again, when the market's open 5 days a week, that's all you got to do, 10 minutes a day. It will supercharge your training and your understanding and help you go a long way to mastering these charts and understanding what's going on in the market. Along with it, you'll get the layout that we use at freestockcharts.com. We'll give you our layout there. The operative word there is free, like everything that we do here. And we will send you our How to Read a Stock Chart video. Can you beat it? No, you can't beat it with a hammer. Thank you so much for being with us, my friends. You have questions, problems, concerns. We're always glad to hear from you. We are your friends here at chartingwealth.com.